G'day and welcome to this week's video. This week we're going to have a quick conversation around the investment property markets, which has been hitting the news substantially over the recent times. And it's probably been many years that a lot of economists have been pointing to some downturn in the property market. And while we're seeing a bit of this happen over in the West, and the resources boom has tailed off and it's had an effect on property valuations, we're yet to see this on the eastern side of the country, particularly in Melbourne and Sydney. But it is an area of concern, particularly in the apartment area. There's a huge amount of apartments going up, particularly in our major capital cities, Melbourne, Sydney and Brisbane, and there looks to be a substantial oversupply coming on, with over 90,000 new apartments being built currently in Melbourne, which will come online over the next year and a half. But I wanted to go through some of the areas that are of concern to me. I do think it's an overpriced market, and as any asset goes up and is pushed up by low interest rates and easy money, the risk gets higher as you go along the timeline and the growth of those assets. So I thought I'd go through some of the areas that could trigger some downturn, and there are quite a few, so you'll need to bear with me. One is the increasing interest rates. So we've seen APRA, the government banking regulator, been increasing rates for investor loans, particularly those that are interest only. So while we've seen some owner-occupier loans come down by a little bit, because interest rates are still at historical lows, interest rates have started to edge up in those more risky areas. The banks want to restrict the amount of interest-only loans. APRA have said they only want no more than 30% to be interest only. So increased in borrowing costs will definitely have an impact on demand for these properties. Obviously, local banks, so when I say local banks, our major banks have blacklisted certain suburbs. So getting finance, particularly for foreign investors, obviously a lot of those would be Chinese investors, are going to find it hard to get finance, and that'll be an issue. A lot of the Chinese developers that have been buying up substantial plots and very expensive plots of land to do developments for apartments are having trouble getting finance. They need to have sold nearly 100% of a development before they'll get finance, and that's not an easy thing to do. There's going to be capital restrictions on Chinese investors and their developers getting money out of China into Australia. So the Chinese government is worried about the effect on their currency. So they're very mindful about restricting the amount of capital that flows out of their country. Keeping in mind that Canada's been a huge beneficiary, the US has, New Zealand has, and the UK has. There's been Chinese money flowing out all over the world into particularly residential property investments. There's also going to be a restriction on the amount of a development. So if you can imagine an apartment building and there might be 100 apartments in there, there's going to be a restriction on the amount that can be sold to overseas investors or owners. So in the past, between 80 and 90% of these properties have been easily sold to foreign investors. That's going to be limited to 50%. So that's trying to ensure that the local people can have the opportunity to purchase an apartment or their home. Again, overseas investors, they can only sell to an Australian citizen. So these new developments, foreign investors can buy a newly built home. So that helps to encourage development and keeping people employed building these buildings. But if they decide to get out, they cannot sell their essentially second-hand apartment to another foreign investor. It has to sell to an Australian citizen. So that pool of buyers is going to be substantially less than, obviously, when you've got a new property, you can sell to an Australian or you can sell to a foreigner. But if you're going to resell that property, you can only sell to an Australian citizen. So that could have a huge impact on the demand for certain properties. There's also going to be penalty costs, and this was brought in the last budget for people that leave their property vacant for more than 6 months each year, and that's going to be 1% of the capital improved value. So a $500,000 apartment that's been left vacant for more than 6 months will attract an extra a penalty that the state revenue will look for of $5,000. So it's very substantial. And this is quite a big one, and we'll look at a couple of examples here where, increased stamp duty to, it's an additional stamp duty for foreign investors. So when you would buy off the plan, people would always avoid stamp duty. There's certain exemptions that apply if you're when you're buying a new property or it's going to be a resident, you wouldn't need to pay stamp duty. But this 7% increase for foreign investors is going to apply to everything. And just to give you a bit of an idea of the impact that's going to have, I've done some calculations here. So this would be a local person buying a property. So we can see just around $19,000 there. But if we say, right, this is now going to be a foreign purchaser, and they're buying it as an investment, so it's not going to it's going to be a residential property, but they're not going to be living in it. So $19,000 there on $450,000, and all of a sudden, when we recalculate this, all of a sudden we get to $53,500. So these are substantial incentives or disincentives for foreigners to purchase, and it's all about trying to take the heat out of the market. With all these issues, that is the extra additional stamp duty is substantial. The amount of supply that's going to come online over the coming years, if you go down to Melbourne, there's still plenty of cranes around. It is going to have a substantial impact. My apologies for the length of the video. I hope it's helpful. Please feel free to make some comments whether you agree or disagree. I've got no doubt there'll be people that will disagree, but these are things to be very mindful of if you're considering to purchase a property, particularly an apartment in one of our major capital cities. Give us a thumbs up if you like the video and subscribe to the channel. That would be great, and we'll catch you next week. Thank you for listening.